Hi everybody, welcome to my channel. I'm the Canadian Finance Guy. I'm here to share my investment journey with you all. I'm trying to grow this account to $100,000 in the next couple of years and hopefully to $500,000 or $500,000 within the next 10 years. So it's currently at $39,000. I'm up $800 over all time. I started this account up specifically for this channel and I've had it since March, so it hasn't been a year yet. As you can see, like I said, I'm up 2%. It's held in a tax-free savings account at Wealthsimple, meaning that all of my dividends and my capital appreciation in this account will be tax-free. Let's go and look at my holdings and sort it by total gain and loss. So my portfolio is split up into different sectors, technology being the heaviest weighted, and then we have financials, we have some consumer discretionary in here, we have some railroads, and then we have some semiconductors. So scroll down and let's look at the technology sector. It's the one I'm the most down on right now. So let's look at Microsoft. Microsoft got it at 19 shares for a total value of $4,600. My average price was $266. Makes up a large portion of my account at 16%, and I'm down about 10% on this holding. Let's go back and let's look at Google. So Google, I have 44 shares of Google at a total value of $4,300. My average price is $106, almost $107. Makes up a large portion of my account at 15%. Similar to Microsoft, I'm down about 9 to 10% on this one. Then we have Apple. I have 22 shares of Apple at a total value of almost $3,400. My average price was $152 on this one, and makes about 12% of my account, and I am almost break even on this one. So as you can see, my technology sector, is the most heavily weighted at 40%. That's because I kept buying as the stock prices went down, trying to dollar cost average. But like I said, it's pretty heavily weighted, and I'm trying to diversify myself into other sectors. So hopefully I'll, continue to add if prices go down in the technology sector, but I'll be very cognizant not to add too much, as I want to stay diversified into the other sectors. The next largest sectors in my portfolio are the financials and the consumer discretionary. So let's go and look at the financials first. It's made up of TD, American Express, T. Rowe Price, Royal Bank, Visa, and up here JP Morgan. So TD, I have 27, almost 28 shares of TD at a total value of $24, almost $2,500. My average price was $87 on this one. Makes up about 6% of my account, and I'm up almost 2% on TD. Next, we have American Express. American Express, I have 10, almost 10 and a half shares of American Express, total value of $1,500. Average price on American Express was $149, and it makes about 5, almost 6% of my account. I'm up 2% on American Express. We have T. Rowe Price. T. Rowe Price, I have almost 15 shares of T. Rowe Price at a total value of $1,800. Average price on T. Rowe Price was $118 per share, makes about 6% of my account, and I'm up 3% on T. Rowe Price. If we go to Royal Bank, I have almost 9 shares of Royal Bank at a total value of almost $1,200. My average price on Royal Bank was $123, and I'm up about 7% on Royal Bank. Go to Visa. Visa, I have almost 7 shares of Visa, total value of $1,400. My average price on Visa was $197, makes about 5% of my account, and I'm up almost 7% on Visa. The last one of my financials is JP Morgan. So JP Morgan, I have 12 shares of JP Morgan at a total value of $1,600. The average price being $113, makes up almost 6% of my account, and I'm up pretty big percentage-wise on JP Morgan at 17%. I really like the financial sector here in my portfolio. I have a good group of well-diversified banks such as JP Morgan, TD Bank, and Royal Bank. They pay a good starting dividend yield, anywhere from 3 to 4.5%. And like I said, they're very well diversified, and they've had a solid track record of paying dividends. And also in my financial sectors, I have some growth financials, such as Visa, T. Rowe, American Express, who grow their annual dividends at high rates and their earnings as well. So that's the financial sector. If we go and look at what we would call the consumer discretionary sector, we have Home Depot here, we have Lowe's, and we have Costco. So if we look at Home Depot, it's a pretty small holding in my account. I have 2 shares of Home Depot for $600, makes up about 2% of my account, and I'm up 2% on Home Depot. If we go to Lowe's, very similar companies operating in that duopoly environment. I have 8 shares of Lowe's, total value of $1,700. My average price was almost $200 for Lowe's, around $196. makes about 6% of my account, and I'm up 6% on Lowe's. Then if we look at Costco, I have almost 3 shares of Costco, a total value of $1,400, average price being $427, makes up 5% of my account. And it's the largest gain in my portfolio based on percentage. It's up about 22.5%. So I like the consumer discretionary sector as well. Lowe's and Home Depot kind of, that, like I said, that duopoly that has a hold on market share in terms of home renovation and home building products. And Costco, is just an amazing company. I feel like everybody knows Costco. They go to Costco, they go and they spend, a ridiculous amount of money, and the customer service is great. And I would love to add to my Costco position long term. Okay, then we have the railroads. Here we have Canadian Pacific Railway. Canadian Pacific Railway, a staple in the Canadian economy. Here I have 24, almost 25 shares of Canadian Pacific Railway. Total value of almost $2,600. My average price was $93. Makes up 6%, almost 7% of my account. And I'm up about 12% on Canadian Pacific Railway. Then we have semiconductors. So semiconductors, I have Texas Instruments. Almost 8 shares of Texas Instruments at almost $1,400. My average price per share was $162. So I'm up about 7% on Texas Instruments. Like I said, I like Canadian Pacific. It operates in an oligopoly environment where there's, 5 or 6 class 1 railways in all of North America. So it's very hard to get into that industry, and I don't see them going away anytime soon. Texas Instruments, solid dividend payer, long track record of being shareholder friendly and increasing dividends and reducing their share count. And they make analog chips, which basically go into everything that we use. So that's essentially my full portfolio for now. Like I said, I'll continue to dollar cost average every month. I'll be contributing to this portfolio monthly and trying to get my way to $100,000 in the next couple of years, and hopefully $500,000 within 10 years. And I'll be doing a deep dive into each of these companies, making separate videos on why I hold them, why I think they're, attractive to buy and add to portfolios, and other companies that I think, might be worth considering adding to this portfolio, or just generally companies that I'm interested in. So thank you for watching. I really hope you appreciate it. Again, I'm the Canadian Finance Guy. I'm here to share my investment journey with you. So I hope that you like what you saw and you continue to watch, so you can be watching my investment journey and share on my investment journey. Thank you very much. I hope you have a great day.